Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
UK could face Eurozone-style economic meltdown after Trump tariffs pummel markets. The UK is at risk of a Greek-style debt crisis as US President Donald Trump's escalating trade war shakes the global economy, investors have warned. The nation's £2.7 trillion debt, which now surpasses the size of its economy, coupled with a fragile financial position, could leave Britain vulnerable to a negative spiral reminiscent of Greece's debt crisis a decade ago, one of the world's largest investment firms claimed. Neil Robson, head of global equities at Columbia Threadneedle, said Britain's current economic situation is reminiscent of the lead-up to the 2009 Eurozone crisis, when investors realized Greece could not balance its books and bond markets turned on it. He explained, "If you think about the problem of being very indebted, you can be as indebted as you like as long as your nominal growth is higher than your interest rate. But if your nominal GDP growth stalls below your interest costs, then you're in a real negative spiral, and it can move really quickly. We saw that with Greece during the Great Financial Crisis." Read more. Hypersonic weapon breakthrough as UK defense chief hails milestone moment. The warning comes after Mr. Trump's Liberation Day tariffs wiped £3.8 trillion, $5 trillion off global stock markets, sparking a global recession threat. The move has slashed growth forecasts worldwide, leaving the UK particularly exposed. The Chancellor had hoped economic growth would offset Britain's rising debt, but Mr. Trump's tariffs have derailed those plans. The president imposed a flat 10% tariff on all nations, with rates rising to 50% for the most affected. Though the UK initially avoided the higher tariffs, its integration in the global economy means it is still vulnerable to reduced growth, potentially sparking a crisis for UK debt, known as gilts. These are crucial to global investment markets, and any loss of investor confidence could cause a catastrophic sell-off. Don't miss, Putin unleashes fresh hell on Ukraine after savage Russian attack kills 9 kids. Insight. Rachel Reeves poised to turn screw with expert issuing devastating warning analysis. Criminal gangs exploiting EU border gaps pose growing threat to UK security. Pictures. We use your sign-up to provide content in ways you've consented to and to improve our understanding of you. This may include adverts from us and third parties based on our understanding. You can unsubscribe at any time. Read our privacy policy. Bruno Schneller, managing partner at Erlin Capital Management, feared the global stagflation shock triggered by Mr. Trump's trade war could have devastating effects on UK debt markets. He told The Telegraph, "Slower growth, higher inflation, and a jittery investor base could combine to push UK borrowing costs higher at the worst possible time." The tariff fallout has sent global markets into turmoil, prompting JP Morgan to raise the risk of global recession from 40% to 60%. While UK gilts have benefited in the short term, investors fear this won't last as the full economic impact of the tariffs unfolds. Harold Berlinick, partner at Sarnia Asset Management, said, "If Trump doesn't course correct, this crisis will affect many different areas in global markets." Further adding to the strain, Chancellor Rachel Reeves has had to cut welfare benefits to secure £9.9 billion in fiscal headroom at the spring statement, leaving minimal room for maneuver should the global economy worsen. The Office for Budget Responsibility, OBR, has warned that a full-blown trade war could wipe out the remaining margin for error in the government's fiscal strategy, potentially forcing further tax increases. Mr. Trump has insisted his tariffs are going very well despite the market bloodbath. However, Mr. Robson echoed growing concerns, stating that recession risks have risen significantly, and it's difficult to see what the solution is unless America walks back on this.